by the end of 2025, I mean, I also made calls that Bitcoin would hit 100 by the end of 2024. Unfortunately, I was right about that, although it's bounced around at that level. But yeah, I do kind of think we'll see 200 on this particular cycle. And by the way, once we get there, we might correct back down to 130 or something. But, we are in a bull market cycle for Bitcoin based on, the past cycles. They tend to go 5x off the base, and the base was called the base. Depends on what you want to look at, but say it's 40,000. 5x is 200. So yes, I think this cycle will take us to 200. Well, if you look at Bitcoin and gold compared to that, they are just absolutely crushing it in the last 3-4 years. And so
Lawrence Lepard begins by clarifying a common misconception held by potential investors, that it is too late for them to profit from Bitcoin's rise. Many believe that the ship has sailed at $100,000 per Bitcoin, but Lepard maintains that this is not the case. There is obviously still a lot of space for growth, as evidenced by the $2 trillion market valuation of Bitcoin, which represents only 2% of the astounding $900 trillion global financial asset pool. Lepard stresses that although Bitcoin is still in its infancy, it has the ability to upend established financial systems and eventually displace the dollar standard. Lepard claims that Bitcoin is the most asymmetric investment opportunity he has seen in more than 4 decades. He believes that because of its unmatched qualities and growing popularity, Bitcoin may reach $1 million per coin in the next 5 years. Please remember to like this video, subscribe to our channel, and enable post notifications if you have a strong interest in learning about the future of finance and the function of digital assets like Bitcoin. This will ensure that you never miss anything. Thank you, and enjoy the video.
that just is what it is. And we're still in very early days. I mean, one thing I'd like to point out, David, I think your listeners might enjoy it, is just the notion that this is, I mean, a lot of people I know think they're too late. They look at Bitcoin at 100,000, they know people who bought it cheaper. They think, how can I pay that? It's way too much. It's too high. And what they don't really understand is that it's going to continue going up for a very long time as it kind of slowly but surely replaces the dollar standard. And, there are $900 trillion of global financial assets out there. If you look at everything, if you include real estate, stocks, bonds, cash, etc. The Bitcoin market cap today is 2 trillion. So it's 0.2% of all of the, the assets out there. So, that's a very small percentage, a very small weighting. I mean, we're still very early days. And I mean, Bitcoin could go up in value 10x, which would take it from today's value of 100,000 up to $1 million a coin. And if it were to do so, it'd still only be 2% of total assets out there. So it's got quite some way to run. And I think that's one of the things a lot of people have a hard time getting their head around. I mean, I know when I was buying it, I mean, Max Kaiser bought it at $2 and I was buying it at 400. So, everybody feels like they're too late. But if we're correct that, the fiat is slowly but surely getting debased, and that this is a potential new monetary system, which I think it is, and my book talks about that, then you're really not too late. You just buy it and forget about it, hold on to it, and I think you'll wake up in 3 to 5 years. I mean, let's say in 5 years it's $1 million a coin, which is kind of what I expect. 5 years.
Sure.
Well, anybody coming along looking at it then is going to say, "Oh my God, you bought it at 100,000? Gee whiz! I wish I'd done that, right?" And so, and then of course the person who buys it at $1 million, that 10 years later it'll be at 10 million a coin, and somebody will have the same conversation. So, it's the thing, and the reason I say all this, and the thing that I also think is important to point out with respect to it, is we've never seen anything like this, David. This is a commodity that has an inelastic supply that we can't make any more of it. So the 21 million, we're growing towards that. We're at 19 and change. So there's a little bit more being made, but I mean, basically, we're very close to the supply limit, and as a result of that, it doesn't matter what the price is. The schedule of supply isn't going to change. The price of gold goes to 10,000, which I fully expect in this cycle. By the way, we're going to mine more gold. I mean, they're going to dig more holes and produce more gold because it'll be profitable to do so. The issuance schedule of Bitcoin doesn't change. And that's why it's very hard for traditional financial people to get their head around the fact that this thing's going to go up a whole lot. It's a very asymmetric bet. And I've been saying that, the book says it. This is the most asymmetric thing I've seen in my 40 some odd years of making investments. And so by the end of 2025, I mean, I also made calls that Bitcoin would hit 100 by the end of 2024. Unfortunately, I was right about that, although it's bounced around at that level. But yeah, I do kind of think we'll see 200 on this particular cycle. And by the way, once we get there, we might correct back down to 130 or something. But, we are in a bull market cycle for Bitcoin based on, the past cycles. They tend to go 5x off the base, and the base was called the base. Depends on what you want to look at, but say it's 40,000. 5x is 200. So So yes, I think this cycle will take us to 200. I would be more worried about missing, the upside than about any potential downside from here. I mean, the model that I use that I think is a pretty decent model is the power law model developed by Fred Krueger and, a few other guys. And, it says right now fair value is kind of right around 80 or 90. And sometimes this thing gets to 2 standard deviations above fair value, which would take you up to 200. And sometimes it trades at half a standard deviation below fair value, which would take you back down to 60. So, my view is, I mean, I don't look at it as something I trade. Okay, I hold it for a very long-term time frame because I think it's going to continue to compound at a rate that's higher than almost anything else out there. I mean, maybe if you can pick a really good company that turns into an NVIDIA, you can beat it. But, for those of us who can't do that and just want a safe, place to put your money, or, in a 5-year time window, I am highly confident that the performance of Bitcoin is going to be really good.
Lawrence Lepard clarifies a common misunderstanding regarding Bitcoin and its relationship to the Nasdaq. Lepard contends that this proves Bitcoin is not just another speculative asset linked to market liquidity, unlike what some skeptics claim. Since Bitcoin develops into a distinct and autonomous asset class, he thinks this correlation is just temporary and will eventually disappear. Bitcoin's unique characteristics, scarcity, decentralization, and resilience to manipulation, are what set it apart. These characteristics guarantee its long-term value and set it apart from conventional financial assets. The idea that Bitcoin is only a trend or a speculative bubble is another myth that Lepard addresses. He strongly challenges this by emphasizing Bitcoin's function as digital gold, a dependable store of value in a time when fiat money is becoming less and less useful. Bitcoin, according to Lepard, is not just an investment. It's a fundamental shift in how we think about money and value preservation. Here are more clips from Lawrence Lepard's insightful interview to better understand Bitcoin's transformative potential.
Yeah, it could all be in the price. Well, certainly one that we're all watching, and we think that it's going to happen, is if the United States decides to unilaterally, create a strategic Bitcoin reserve, that could have an impact on the price. I think that, there's evidence that other countries are accumulating Bitcoin. And so there's further evidence that, in my mind, that this is starting, so this used to be a very individualized investment, just crazy Bitcoiners were buying it. Then it became a broader investment when the ETFs got approved, and people like BlackRock, the largest fund manager in the United States, started buying it and approving of it.
Yes.
And now we're kind of moving into a situation where countries are buying it. I mean, El Salvador has been buying it, but they're kind of small, and they were the first mover. I was at this Bitcoin conference in the Middle East at Abu Dhabi in December, early December, and Trump's son was there, and so was Paul Manafort, who's a Trump guy, who did part of the transition team. And it's pretty clear to me that they think that they're going to do a strategic reserve. And the other rumblings behind the scenes were that Abu Dhabi, Oman, or Abu Dhabi being UAE, Oman, and the Saudis are all accumulating Bitcoin. And in fact, I was told that they want to announce it, but the Trump administration said, can you wait until after we've announced ours? So, if you get to the point where nation states start to realize that this is important, I mean, look, nation states realize gold is important. That's why they hold gold on their balance sheet. That's why central banks have been net buyers of gold for the last 5 years.
But do you agree with Cuban with the notion that Bitcoin is a better safe haven asset in hard times?
Well, yes. I mean, so let's get our terms right. Let's define safe haven. I mean, there is no doubt that Bitcoin is more volatile than gold. I mean, that's just a statistical fact.
Yeah.
So, if you want to define safe haven as low volatility, then no, gold is a better asset than Bitcoin. If your only measure is volatility. I mean, if your measure is alpha and potential upside, Bitcoin crushes gold. So, it kind of depends on what you're looking at it for. I mean, one criticism a lot of people have leveled at Bitcoin is they've said, well, it's really just a liquidity widget and it trades like the NASDAQ. When the NASDAQ goes down, Bitcoin goes down. And there isn't a safe haven bid for Bitcoin. And that's a fair criticism because there has been a pretty tight correlation. But I think that will change over time. I think that we're heading into a period where it's going to be seen as a safer haven. And I'll tell you why I say that, David. There's a really interesting chart. I don't have it in front of me right now, but if you run a chart of Bitcoin compared to the long bond, what used to be the safest haven financial asset, the long bond, the 10-year bond, the 30-year bond, right? I mean, as a U.S. Treasury, couldn't default, it was good as gold, so to speak. Well, if you look at Bitcoin and gold and compare to that, they are just absolutely crushing it in the last 3-4 years. And so the bonds are disappearing as a safe haven asset, in my opinion. And Bitcoin, gold has always been a safe haven asset. I think will continue to be one, but Bitcoin, I think it's going in that direction. Well, so I think the way a lot of Bitcoiners and gold people handle it is, I mean, you've really So money really serves two functions, right? You've got your money that you're saving, and then you've got your money that you use to pay your bills. And I know a lot of people who all their savings money is in either gold or Bitcoin or some combination of those two. And then as they need money to pay bills, they may sell a little bit and pay the bills, but they don't leave money sitting in dollars, just, unprotected, getting, 4% on treasury bills or something. It's not enough return. And so you kind of divide your money into two buckets, your savings bucket and your spending bucket. And the dollar is obviously the reserve currency of the world. It's the easiest thing to transact in. I will say this, I mean, the Lightning Network is getting better and better, and there will be ways to transact with Bitcoin more easily in the future, but it's still early days. And so, to me, it's a straightforward thing that what I'm talking about are savings and investment, not dollars that you're going to spend. If you need the money tomorrow, for people who are all in on Bitcoin and have to sell Bitcoin, fine. If you want to do it that way, great. But I always keep a small balance of fiat to pay bills with.
According to Lawrence Lepard, Bitcoin is becoming more and more acknowledged as a strategic asset by both individual investors and nation-states. He tells an intriguing story about attending a Bitcoin convention in Abu Dhabi, where he discovered that nations like Saudi Arabia and the United Arab Emirates are covertly amassing Bitcoin. Lepard claims that these countries are thinking about making their Bitcoin holdings public, but are holding off until the ideal time, which may be in line with U.S. geopolitical plans. This demonstrates how Bitcoin is now seen as a reserve asset, much like gold, rather than a speculative one. Lepard also discusses how Bitcoin's status as a safe haven asset has changed over time. Although he admits that Bitcoin is more volatile than gold, he emphasizes its stronger upside potential, or alpha, which makes it a tempting choice for long-term investments and savings. He argues that bonds are becoming less of a dependable store of wealth and compares Bitcoin to conventional safe haven investments like government bonds, which have underperformed dramatically in recent years. According to Lepard, the secret to wealth management in the current financial environment is to divide your money into two categories: savings and spending. He argues that many investors keep a lesser amount in fiat currency for everyday transactions and devote their savings to assets like gold or Bitcoin to guard against inflation and the depreciation of fiat currency. Additionally, he notes that developments such as the Lightning Network are progressively enhancing Bitcoin's transactional currency use, making it more useful over time. And as always, happy investing.